Hey guys, Ken Calcutt here with Cornerstone Financial Management. Hope you're doing well. Today is June 18th. I wanted to give you guys an update on what's been going on in the markets. So today I want to start with this. We touched on this maybe a month ago. The stock market, I think, is largely driven by these factors right now. Oil prices, the 10-year yield, and the new Fed chair, Warsh, that just went into seat this week. So I want to touch on these. I'll just give you a quick viewpoint, at least from my perspective. I think the stock market generally is doing pretty well right now, and that's because oil has come down. If y'all remember, I was saying oil needs to get below 90 and kind of stay there. Well, this week we're down to about, I think, 79 bucks a barrel, which is fine. Markets can tolerate that all day long, so that's a very healthy price for oil. We'll see if it stays there, but oil has come down like we wanted it to. 10-year yields are also below 4.5, which is where we need it to be. I think it's around 4.45 right now. If this creeps high like 4.8 and oil prices creep high like 90 to 100 a barrel, the stock market's probably going to be creeping lower. Right now, these have come down and the stock market has recovered. So stock market's at all-time highs or very close to it. We'll look at that a little closer in just a minute, but these two factors have helped the stock market. This one is the big question mark. Kevin Warsh, they had their first Fed meeting under his regime. Yesterday was their first meeting where they had their press conference. And it's funny, if you look, this is a big question mark because the market is going to respond to how we perceive his policies are going to look. Because the movement of interest rates is going to affect the stock market movement a lot, more than people realize. So investors are now trying to figure out, how is this guy, what's his view on how he's going to handle interest rates compared to Jerome Powell, who just left that seat. So let's pivot and look at the stock market chart from yesterday and see what we saw just while he was speaking. Okay, so here's the stock market chart for pretty much for this calendar year, 2026. Okay, let's start with this. We had this nice little drop in March. That was when the war began. Oil prices spiked, stock market dropped. Late March to late May, we had a really big rally. And then in June, we've kind of been yo-yoing along here for June. But what I want to zero in on is just yesterday and what the market did during the speech. So give me just a second here. Okay, so this chart is showing basically early yesterday through today. This right here is 2 o'clock yesterday. This is like 5 minutes after he started talking. The stock market goes straight down within 5 minutes. We have a brief little rally and then straight down again. All of this happened in a matter of 2 hours yesterday. I didn't even read the minutes from his speech. I didn't listen to the speech, but I can tell you, looking at this chart, his speech indicated the Fed is considering raising rates, 100%. The market's not going to like it if they raise rates. And what's ironic about this is he's a Trump appointee. Everybody knows Trump wants rates lower. He appoints this guy thinking Warsh is going to lower rates. Warsh comes out in his first meeting and indicates they might actually raise rates, which I think is encouraging. I think this is a good sign that he is not going to be a puppet. He's an independent thinker. He's going to do what the Fed needs to do that's best for the economy, not a political move that the president wants. So the market didn't like it yesterday, but I think it was the right thing for him to say. I don't think the economy needs interest rate cuts. I think the economy is very healthy with interest rates where they are. And I think he agrees with that. I think he indicated yesterday they announced they're just going to hold interest rates. And there's a possibility they might need to raise them if inflation starts to ramp up. I don't disagree with that. I think it was the right thing to say, but the market didn't like it because higher interest rates make it harder for stocks to grow. So we saw a brief sell-off for the end of the day. Now we get into today and we are immediately recovering that sell-off. So it was really just a knee-jerk reaction. I don't think it was a big deal, but the reaction alone tells us what the market feels about what this guy's thinking. So this is what I expect to see for the next 90 days. I think the market's got to figure out his policy. I think the market could be volatile for that 90 days, but ultimately I think it's going to be fine. I think his policies will be right in line with what the economy needs, and the stock market will move higher and keep moving the way we expect. So that's the big variable that's in the equation now. New Fed chair, possible new policy. What's it going to do to the stock market? We don't know. We wait and see. But ultimately, I'd say everything looks pretty good right now. The stock market's near all-time highs. Oil prices are down. 10-year yields are holding low. The economy seems pretty healthy. Everything's pretty good. So we'll wait and see how things play out with the Iran war and hopefully getting that finally wrapped up. But for now, everything looks pretty solid. Hopefully that continues this year. But just want to give you guys some info. If you have any questions, reach out to us anytime. Thanks.